I think this is a very important budget. We would see a lot of reforms. I think our own personal view is this government is more pragmatic than sort of more big bang. So in terms of its style, I think we would see a lot of pragmatic reforms rather than big bang reforms. So, the FM has commented a number of times that the fiscal deficit would, that they would be committed to the fiscal deficit they talked about earlier on, which is about 4.1%. There is a lot of sort of focus on these numbers because as at the end of November, the fiscal deficit had already sort of, met the full year's guidance. And even historically, this is much worse because if you look at the 5-year average for, say, April to October, it's about 74%, and much of this is because of shortfall on the revenue side. So the tax collections have been very weak at only about 6% compared to the budget estimate of 20% or so. The divestment proceeds, as you know, have been not been enough and unlikely to meet the target of about 60,000 crores in the budget. So there has been a revenue shortfall. I think the good news, however, is on the expenditure side, the government has reined in the expenditure quite a bit, both plan and non-plan. There's been a 10% spending cut that the government has already announced, which accounts for about 0.5% of the GDP. So I think we will rule out one more sort of cut in the spending side so as to rein in the fiscal deficit. Our sense is the government should be able to get there in terms of meeting the guidance for fiscal deficit. I think the biggest challenge for the government today is to basically get the growth back on track, is to spur the growth in the economy. And the consensus there, in fact, led by the view of the chief economic advisor to the government, is that the government is going to have to pitch in with investment in infrastructure. The private sector is not today in a position to take up all of that burden. So I think what we're going to see in the budget is significant commitment from the government in terms of spending on infrastructure. We're going to see a lot of reforms in terms of making it possible for infrastructure projects to, to get done and to see the light of the day. And I think a third big area, which should be a new area, is, and the FM has talked about it repeatedly, is innovative financing for infrastructure. And that probably, if you're able to crack that in terms of incentives for innovative financing, that potentially could be the elixir we are looking for so as to spur growth, but at the same time keep fiscal deficit in order. And in fact, to extend that further, I think one of the things we would want to see, and I think we would see in this budget, is other incentives and initiatives so as to spur growth, which means it should be easier for FDI to come in. There should be incentives and initiatives so that we see more longer term capital coming into the country, whether it's in the form of debt or equity. We've seen the recent RBI announcement with respect to limiting debt flows from foreign investors mostly to 3 years and above. So I think that was a welcome initiative. So I suppose the government would mirror some of these as well. And I think that would be the sort of focus area. How do we spur growth? How do we make it easier to do business? How do we make FDI easier? In fact, if you look at the AIF market, the fund market, the alternative investment fund market has grown about 2.5 times over the last 12 months, as opposed to, say, the mutual fund market, which has seen a growth of 25%, albeit be on a very different base. But proposals such as streamlining and making the tax treatment of AIFs more transparent would actually significantly boost this market and actually allow for a more efficient allocation of capital into the more productive sectors. So I think the focus on the budget is going to be growth and investment, and what can the government do to drive that. See, there are two elements to that. I think if you look at overall taxation on the corporate front or on the investment front, one of the things that the investment committee is looking at very closely is just predictable tax regime. I think for once and for all, they want to sort of put a put an end or put a rest to retrospective taxation as a phenomena and have a more predictable tax regime. So I think it would be, we would think that the government would comment on that and have something concrete there. In terms of, I think, the other part would be we are likely to see tax incentives for the important government initiatives, and I think the most important there is the Make in India initiative. So I think we should see significant incentives there, and potentially that's the area where you may see a big bang reform. I think we should also see some rationalization on inverted duty structures, which the FM actually, referred to in the previous budget. He did make some corrections there, and I think we'll see more on that going forward. On the GST, while everybody is expecting a definite roadmap, we think that will take a little bit more time, and you may not see that concrete a roadmap in this particular budget. On the personal tax front, and I think on everything that sort of affects us personally, our view is there will not be any sort of significant cuts or concessions because I think the government simply doesn't have the room to play around on the revenue front. So we feel the income tax rates will by and large remain sort of where they are. We might even see an increase in indirect taxes on non-essential goods, because that would be one way of boosting the revenue side for the governments. We are likely to see some cuts, spending cuts in revenue expenditures such as subsidies. The FM has in fact talked about LPG subsidies. He said maybe we have to cut some LPG subsidies, maybe we have to cut it from a section of the consumer market that doesn't need it. So I think all in all, from a consumer point of view, we are likely to see a budget which is light on populist measures, if not austere. I think it's hard to pinpoint one, but I think the two or three, really important ones, significant ones for us would be infrastructure investment and reforms. That would be number one. Number two for us would be reforms in FDI flows and financial markets in general, because we need an official financial market to really spur the kind of growth we are looking at. And I think a third, probably a bigger area is, and I think there's a more longer term implication to that, we have to structurally improve tax collections and broaden our tax base. And I think if we can put something more concrete in place to improve that over a more longer term, as a consumer we'll start to see the burden on sort of the ones that actually pay the tax come down. So I think that's another area where we would want to see, and I think we would see some action from the government side. Last but not the least, I think a number of other initiatives of the government, such as Swachh Bharat, renewable energy, skill development, I think all of these are likely to get a mention and the necessary allocation and sort of incentive, or a combination of that in this budget. I would say overall, we should be looking at a pro-growth, pro-investment budget, some good reforms, some concrete proposals, and I think a very, very light touch to populist measures and concessions.